Hello, everybody. My name is Graham Elwood, and you are watching the Bitcoin Vigilante. Boom. We're focusing on Bitcoin, folks, but we were the Political Vigilante. Now we're the Bitcoin Vigilante because we're just going to focus more on Bitcoin. But we're going to talk politics, but as it relates to Bitcoin. But this is a story I've been talking about for a while. This is why 4 years ago, I was encouraging all of you to buy Bitcoin and hold on to it, because I knew a financial crash was coming. We've had a lot of people on the show, Max Kaiser, Christy I. Everybody was like, it doesn't look good. It doesn't look good. I've done numerous stories. And last Friday, we did a live stream when $2.9 trillion got pulled out of the markets. Started in Japan, then it ended up here. And I was like, the media isn't talking about it. Well, now today, by the end of the markets have all closed today around the world, they have to talk about it now. Because this was an AP, right? So this is a mainstream media outlet. Financial markets around the globe are falling. Here's what to know and how we got there. Markets on Wall Street and around the world are in a mini panic, worried about a slowing U.S. economy. Investors sent the market in Japan to its worst day in decades and have sliced billions in market value off some of the world's biggest technology companies. They've turned a relatively calm year in markets on its head. For most of the year, investors worldwide drove stock markets higher, convinced that central banks were successful, if haltingly, getting inflation under control, and buoyed by a healthy U.S. economy and a promise of artificial intelligence. Well, right there, I mean, let's just stop right there. This is something I've talked about on the show before. We've been in a recession for several post-COVID. We've been in a recession. But they said, oh, no, it's not a recession. Look at this. The job numbers are up. Everything's good. Everything's great. It was like, no, you'd look around this country. And for the last 2 years, I mean, the first year of COVID, okay, everything was shut down. People were getting stimulus money. Everyone was like kind of doing okay, but not really. A lot of industries got wiped out. Some people did okay, but a lot of industries got wiped out. In September of 2021, the unemployment stopped. And then in late 22 or beginning of 23, I forget, all of the eviction moratoriums ended. So we've been talking about this. We've been talking about there's a commercial real estate bubble. There's a regular real estate bubble. There's a car loan bubble. I mean, we've been talking about all these bubbles. Then, when I was in El Salvador doing Orange Pill podcast, Max Kaiser was talking about the bond markets and how that's a huge bubble. I mean, Intel just laid off like 10,000 people or something like that. So this is how like the mainstream media is kind of being caught in their propaganda. They've been saying everything's great, and regular Americans and people all over the world have been like, what are you talking about? Everything's great. Grocery prices have gone up. I mean, the last 2 years, especially, inflation has gone through the roof, and everyone's like, oh yeah, the job market's great. The economy's doing great. Who cares when we can't pay our bills? Well, now the markets are collapsing, right? So now they can't like lie, because when they always say the stock market's doing good, I hate them. I always like, the stock market does not equal the economy. The stock market is, a casino for rich people. The stock market's doing great. What does that mean to you and I? What does that mean to your grocery bill? What does that mean to your car insurance bill? What does that mean to your healthcare costs? What does that mean for just buying your kids' school supplies? What does the stock market have to do with any of that? Nothing. It's just nonsense. So let's get back into this story where they have to kind of own it. That confidence has been hit in the past few days. Weak readings in the job market, manufacturing, and construction last week sparked worries about a U.S. economic slowdown and criticism the Federal Reserve waited too long to cut rates. Meanwhile, the Bank of Japan raised rates, causing turmoil in Japan's markets. On Monday, the Nikkei plunged more than 12%, its worst drop since 1987. Investors are now listening to warnings that Apple, Nvidia, and other big tech stocks have gotten too expensive. On Friday, tech-heavy NASDAQ composite went into a correction, which is a 10% decline from its most recent high. It dropped an additional 3.4% Monday. So we're talking about almost a 15% drop on the NASDAQ. Traders in the U.S. are betting the Federal Reserve will lower rates by 0.5 percentage point in September instead of the usual quarter point. Some are calling for an emergency rate cut. The heaviest selling has been in small companies that make most, if not their sales and profits in the U.S. Prices for oil and other commodities fell because of the economic worries. However, there are opposing voices saying a sell-off is a good thing because the stock prices have risen too high. For individual investors, it's not the time for rash decisions, but a moment to make sure their investments are properly diversified. So since 2022, the Fed has been raising interest rates, which a lot of people have said that's a bad idea. The European Central Bank and the Bank of England cut rates once the Fed signaled it was prepared to cut rates. Yeah, the big tech companies they're pumping their stuff up. So let's get into Japan. The Nikkei suffered its worst day ever decline, dropping 18.2% on Friday and Monday combined. 18.2% in 2 days. One catalyst for the outsized move has been the interest rate hike by the Bank of Japan last week. We talked about that on Friday. The Bank of Japan's rate increase affected what are known as carry trades. That's when investors borrow money from a country with low interest rates and relatively weak currency. Wow. So don't load up on Bitcoin. As of 4 p.m. Monday, the price of the world's largest cryptocurrency was just above 54,000, down from nearly 68,000 1 week ago. While Bitcoin did serve as a safe haven of all sorts during the worst of the pandemic, it mostly acts like another risky asset. Yeah. Well, that's funny. This is what I told you guys when the markets collapse, Bitcoin will go down. 54,000 is a great price to get it, even if it drops more. What is going to happen? As I've been telling you, the markets are going to crash. Warren Buffett just pulled a bunch of money out. I'll get into all these stories in a second. And I think then people are going to turn and look around and go, there's only really one safe store of value asset, and that's going to be Bitcoin. I'm telling you, man. I'm telling you. So here's some more. This is from today on the NASDAQ.
History in the making.
What some would call history in the making. Don't say that.
We have never been down 1,000 points ever, not even intraday on the NASDAQ.
Is that true?
That is true.
Okay. I'm down 6% right from the get-go. This is heavy set. Big tech, here we go. Look at them go down. Microsoft is down $20. That's 5%. Alphabet, 5%. Meta, 6%. Amazon, 6%. Apple, 9% down. Let's pull out Apple. This is interesting. A question, Pete.
History in the making.
What some
so that's
history in the making.
They're saying like this has never happened, right? But this is something Altcoin Daily, and I'm friends with these guys, Aaron and Austin. They made a great point today on Twitter. And the crypto prices have all crashed as well too. BlackRock, MicroStrategy, Fidelity, and Grayscale have all sold 0 Bitcoin. That's why Bitcoin, if Bitcoin was just part of this crazy sell-off and was a risky asset like they keep trying to tell us, Bitcoin would be at like 40,000. It would just be completely plummeting. It went as low as 50 and then has bounced back up. It still might go low again, but I'm telling you, if you haven't gotten any Bitcoin, now is a good time to get it. This is not financial advice. Let's explain the yen carry trade. One of the things that is contributing to this. Traders borrow money in the lowest rate currency, convert that money to another currency, invest in currency. Yen yield goes up, new currency yield goes down. Borrow 1 billion yen, convert to US dollars, buy an asset, profit. Now you have a $450,000 loss. See this? When a leverage trade goes wrong, it unwinds fast. Don't be surprised if stocks, bonds, treasuries, and more go down. If a fund blows up, they don't just, wow. That's what happened in 2008. Remember we kept saying there's going to be a bigger thing than 2008? This is this one, stock hodler. The Japanese yen has retracted an entire year's worth of price action in just 26 days. This isn't about any one asset crashing. This is about the entire global monetary system once again buckling under the weight of its own BS. This is about the Bank of Japan pretending they can raise rates without blowing everything up in the process. The US was already running crisis-level budget deficits. What happens when portfolio values tank and capital gain tax revenues dry up as a result? The US deficit goes ballistic and credit markets ultimately seize up as the federal government floods the market with bonds to pay for deficits. I've been saying this for years on here. The outcome is binary. Wow. Either they let things fall apart or they print to hold it together. So that could mean more money printing. My bias is towards a great debasement, but a portfolio prepared for either scenario will help you with today's volatility passionately. My portfolio remains overweight Swiss francs, Bitcoin, gold, and crucially, no debt or leverage. The best asset to hold through the great debasement, finite bear money without counterparty risk. Yep. No debt leverage. Wow. Okay, guys. I mean, this is what we've been talking about is going to happen, and here it is. Now, this is Jack Mahler. I don't know this guy personally, but he was saying something interesting, and I just wanted to play this.
Fixate again on the. Yes, I do want to fixate again on the reason Bitcoin's selling off. You know, I think it's an important idea by Parker Lewis. Bitcoin's not a hedge; it's a solution. I love that quote. You know, anyone that understands Bitcoin doesn't take 1% of their portfolio and use it as a hedge, right? Anyone who understands Bitcoin. Bitcoin's like their entire portfolio, like me. I only own Bitcoin. And so Bitcoin's not a hedge. It's not supposed to like perform well in the early innings of a financial crisis. Because what happens in a financial crisis is everything sells off. So, you know, even before Bitcoin existed in the 08 financial crisis, gold sold off tremendously before rallying to new highs. And so Bitcoin's not a hedge. Don't evaluate it as an ability to hedge moments like this. It's a solution. It's a replacement. I do want to.
That's a great point. That's one of the things I've been saying too on this show. It will go down, but this is something I really want to show. Warren Buffett is holding a record $277 billion in cash. He just sold 50% of his Apple stock. Now he buys it all at a discount. So that's what these rich guys do. They see this coming. They've been selling off and stockpiling cash. So then when everything crashes, when things are going great, that's when those guys sell off and then they hold on to their cash. And when then everything crashes, they buy everything up at a discount. That's what Warren Buffett's been doing his whole life. I'm telling you. He knew it was coming. All these guys did. They all knew it was coming. Oh, look at that. Weapons manufacturer during all of this financial crisis, who's doing well? Well, Lockheed Martin stock price is up 23% in 1 month while the market has been tanking. Gee, it's almost like Lockheed Martin knew. Isn't that weird? Wow. One of the defense contractors knew this might happen or maybe helped create it. Oh, wow. Weird. Oh, man. As we're ramping into World War III all over the planet, these guys are going to make a buck. Sweet. Way to go, Lockheed. That's why I buy Bitcoin, man. It defunds the central banks. It defunds the war machine and companies like Lockheed Martin. So, and this to total it up, this is what happened today. $1.4 trillion was wiped out today on the US stock market. So 2.9 Friday, 1.4 today. That's over $4 trillion wiped out in 2 trading days. That's a lot of money. That's a lot of money. So, this is either they've been planning this, or this is just their stupidity and their short-sighted greed is going to put us in this position again. Could be a little bit of both. Who knows? Taiwan stock market. Taiwan stock market crashes the worst day in 57 years. That happened all today, August 5th, my birthday. Market crash day. Unbelievable. I just bookmarked all of these stories. Now they're calling and they're screaming for a rate cut, which they think might slow this down.
Up 26 points a day. It did over 50 at one point, 49.80. And earlier, Tom Lee said when we see the VIX peak and maybe come down a little, that could indicate some type of bottoming. Joining us now is Jeremy Siegel, Professor Emeritus of Finance at University of Pennsylvania's Wharton School of Business, Chief Economist at Wisdom Tree. Jeremy, I hate, you probably aren't happy to say I told you so either, given what we're witnessing. But you thought the Fed was staying once again, for the second time, staying at the party too long and too restrictive.
Absolutely. And, this may surprise me. I'm calling for a 75 basis point emergency cut in the Fed funds rate, with another 75 basis point cut indicated for next month at the September meeting. And that's minimum. The Fed funds rate right now should be somewhere between 3.5% and 4%. Let me give you very simple logic of my position here. At the June meeting, the Fed has said that the long run Fed funds rate, when inflation reached 2% and unemployment has come up to 4.2%, should be 2.8. That's the normal. 2.8 is the normal Fed funds rate. Well, on Friday, we blew it across the employment number. We're at 4.3. That even argues for a lower one. Now, as far as inflation, we're at 2.5%. We've gone down 90% towards the target on the inflation rate. We've overshot the target on the employment. Those are the two targets explicitly mentioned by the Federal Reserve. All right, and how much have we moved the Fed funds rate? 0. That makes absolutely no sense whatsoever.
All right, now they're talking about 0.75% cut like to now, and then another 0.75% in November. I mean, this is and this is Max Kaiser. I mean, he and I talked about this on Orange Pill when I was in El Salvador. Very few are aware of what's going on here and the risks involved. The yen carry trade has been a linchpin supporting global liquidity for 30 years. If it blows, the credit freeze of 2008 will look small. At issue, the Japanese economy has flipped from deflation to inflation. The weak yen is setting up rate increases. Spread on carry trade gets squeezed to nothing. Wow. Yeah, I remember Max talking about that. I remember him explaining that to me in the audience when on one of our Orange Pill episodes. All right, guys, that's what's happening. That is what's happening. So it's this could be So any number of scenarios could happen. One of the things I talked about is a financial crash happens before the election. I was worried like it was going to happen before the election. So then it's going to cause mass hysteria. Who knows how the effects of this are going to trickle out? Is it going to happen? Is it going to slowly get, I mean, are people going to be kicked out of their homes? If there's a run on the banks where people cannot get cash out of the banks, this is why I've been telling you guys for years, get out of the regular banks, get in a credit union and convert it to Bitcoin. Because this is where there's a run on the banks and then there's riots in the streets. And then they say, oh, martial law, and we're freezing the November election. I mean, the next couple of months, if this financial crisis keeps ballooning like it looks like it's gonna, all these financial experts are saying it, the mainstream media is finally admitting it, we could be in for a real like chaotic times, really chaotic times. Because the average American hasn't felt it, but they're gonna slowly start feeling it. So, what I say on the show, follow the money, connect the dots, get the truth. Grow your own food and buy Bitcoin. I've been saying this, guys. I've been saying this for this very reason, for this moment. This is why I've been telling you about this.